You can give them to the birds and bees. I want money.
How do we get it, Dominic? Good morning to you, Dominic Alafacci from Collins House.
Good morning, Darren and Emily. I have to be serious after that last episode where I fell off the seat.
Yeah, you did too.
I did. Last time I did that when Dear Ernie Sigley made me laugh, but
That's right.
I think I wet my pants that day as well. But anyway, on a more serious note, overnight the Dow Jones Industrial Average rose 247 points to a record of 40,001. And I just looked up, when I first started in 1984, which is 40 years ago, it was 1,179. Now it's 40,000, so it's gone up 9.21% per annum compound for the last 40 years, plus dividends of about 4%. So if you want to make money, invest long term, be patient and diversify. Getting back to the rest of the market, the S&P 500 put on 31 points to 6,515, and the tech-laden Nasdaq was up 115 points to 18,398. And if you do a chart on that, you'll curl your nostril hairs. And the reason why there was such positive news in the US because punters are betting on a rate cut sooner rather than later. Across Atlantic, London's FTSE was 30 points higher at 8,253, with the French, German and Italian bourses all rallying strongly. West Texas Intermediate was 41 cents lower at $82.71 a barrel, whilst gold gave back $1.20 to $2,420.70 US an ounce. And the Aussie dollar is higher against the greenback and is currently buying 76. Did I say 76? Sorry, 67.
Right.
0.84 US cents, with the ASX 200 SPY 50 points higher, pointing to a positive start on Monday, following Friday's FRO market put on almost 70 points to end the session at 7,759.
I was talking to the snake earlier about how much money you need to retire. It changes all the time, doesn't it?
Well, it depends how much money you need to spend.
That's the thing. And how long you think you'll last.
Yeah, living longer is sort of, that's out of your control. But what is in your control, generally speaking, unless you jump out of a plane without a parachute, maybe. But what's in your control is how much you spend. So, look, you know, the Association of Superannuation Funds produces this fantastic survey every quarter, and it's about 72,000, I think, the last one I looked at, for an average couple.
72 a year.
Yeah. I couldn't live on $72,000 a year. I've got to tell you now, I think I pay that much in insurance and rates, and when you think about all the stuff you pay
medical insurance.
Yeah, health insurance. I've got a couple of cars, got 2 houses. It's just rates and land tax.
Land tax.
Oh, I reckon I'd spend 30 grand just on that. It's terrible, but anyway.
Well, does anyone, is people still gearing towards self-funded super, or?
Oh, look, self-managed super funds are quite popular, but you've got to have a good reason to do it. If you're pretty clever at buying houses and tidying them up, you can flog them inside a self-managed super fund environment within reason, and you can make good profits. If you're a day trader, good luck to you, you know, if you love that sort of stuff. But I suppose I want to focus on what people can expect to get in returns. Now, last year, most of the portfolios we look after have made between just under 7 to up to about 12 almost % for the last 12 months.
That's good.
Now, the average of that one I mentioned earlier, the Dow Jones Industrial Average, which is sort of the benchmark, you should look for about 9 to 10 max over the long term. So we've done a little bit better in the short term. So we've been blessed with higher returns, which is the only thing that retirees can look at in their computer to say, thank goodness, whilst my bank account has gone down because the cost of living crisis is killing me, at least my investments, if you've got good quality ones that are diversified and you're not trying to punt everything on some silly get-rich-quick scheme, they've had a really good year. So that's the only good news I've got for investors. Other than that, it's pretty sad out there.
Yeah. We have some callers already. Mary, good morning. A couple of Marys. Mary number 1, good morning.
Good morning, Dominic and Darren. A quick question for you. If I sell property to a relation, but at a much, much cheaper price...
Don't say any, Mary, but don't say any more. No, you can't do it. What happens is you have to do a false declaration when the purchaser signs the contract of sale, because the State Revenue Office would say, when you've got to fill out that form that says, what's the market value of the property, they don't care really what you paid for it, and the same thing would be the Australian Taxation Office in terms of any capital gains. So you'd have to falsify a declaration if you're not selling it at arm's length and at the correct market value. People often ask me, can I arrange other things? There are other ways you can sell it to a relative that are legal yet not caught by the ATO, and that's called vendor's terms, where you come up with an agreement where you sell the property and you say, look, give me $1,000 a month for the next 50 years or whatever you agree on, and you don't have to charge them interest. Now, that, to the best of my knowledge, is not a scheme or an arrangement to dodge tax, whereas the other ones are. So I would be very cautious to get some legal and financial advice on your plan, because you could get a big, ugly surprise if they audit you.
Thanks, Mary number 1, to Mary number 2. Good morning.
Good morning. I was just wondering, Dominic, if you could give me your thoughts on the companies that offer, and I can't remember what they're called, they'll give you money against the equity in your home.
Okay, reverse mortgage? There's two types of offers currently in the marketplace. One is where somebody says to you, we're going to take a mortgage on your house, we're going to own it at one point in time, and that's when you die, when you or your partner, the last survivor, dies. In consideration for you giving them that mortgage, they will advance money to you. It can be monthly, it could be lump sums, it could be yearly, it could be a combination of all three. So that's called a reverse mortgage. The beauty of this, Mary, if you've got a good one, a good supplier, and I do know a couple that are good, I really like the idea of this for people who are cash poor and asset rich. You pay an interest rate which accumulates. It's a bit like if you owe $1,179 and the interest rate's 9%, you'll owe them $40,000. I'm just using the Dow Jones figure. So over time, if you don't pay any interest, that $1,179 you took out will be worth $40,000 in 40 years' time when you kick the bucket. The good news is that the value of the house would have gone up significantly by then. So your children, if there are any children or whoever you want to leave your property to, will get less, but you have got the benefit of spending money now. Now, you could take out a lump sum, a small amount each month, or a combination of both. So I really like them. And there's a couple of good companies out there. One's a Kiwi company that I do know is pretty good. I can't remember, should know their name, but Google them and go to a broker, a licensed mortgage broker, to help you get advice so you can choose the appropriate one. But I have recommended a couple to clients.
Thank you, Mary, for the call. Dominic Alafaci's here from Collins House. You've just got something else for Mary.
I forgot to say, Mary, the second way of getting money on the value of your home is to use a home equity release scheme, and that's where you sell like 25% of your property. Let's say you've got $1 million property. They will buy 25% of it, and then when you pass away, the last person passes away, they'll take their share back when they sell the property, or if you decide to pay the loan back by paying out, the equity back by paying out the home. I don't particularly like those as much as the reverse mortgages, but it's horses for courses, and it might be appropriate for you. So again, I said speak to a mortgage broker.
Good on you, Matt. Good morning.
Oh, hi guys, how you going? I've just got a question for Dominic. I've got a self-managed super fund, which has got pretty much not a lot in it.
Yep.
I got a thing sent to me in the mail from a mob called Just Super Fund Accounting Professionals.
Yep.
Saying that they can do it all for me for $1,200, all inclusive. My accountant's a bit over $4,000, and I'm just wondering whether I'm probably getting stitched up a bit by my accountant, but
Matt, it's a really good question.
To be true, to be honest with you.
Look, it's a really good question. The less you pay, the more of the work is done overseas, and the less, and even some of the $3,000 or $4,000 fees that you're paying, some of the work is done overseas. So, look, I don't mind lower costs, but there's less human intervention and more, we'll call it AI for want of a word, when you pay very, very low amounts of money for self-managed super funds. So it can be difficult. At least if you've got a good accountant, they can give you more personalised advice than if you use a very low-cost fund. But I'm not saying Just Super's no good. I do know them. So it's really if you've got your head screwed on and you know what you're doing, then it's probably, I'd be more inclined to let you use or to recommend that you use the lower cost fund. But if you need a bit of guidance, I'd probably pay the higher fees and get a little bit more personalised service. Make sense?
Sorry?
Does that make sense?
Does that make sense?
Yeah,
Matt?
it does, mate. Hang on to because I've got
Probably.
no idea.
Probably the right thing to do.
Thank you, Matt, for the call. We're almost there. Dominic Alafacci, you were at the footy last night.
Yes,
we were both there, and
Yeah, I think they were just too good. Geelong,
They were too good
in the last quarter.
Yeah.
He ran out of puff. But I've got to say, the umpiring just does me head in. Both sides. I'm not saying it affected our win or loss, but
No.
I couldn't work it out.
Yeah. What about that one? Oh,
Nick
I won't
Dacos
go.
on his knees.
On his knees, chicken wing. Yeah.
I mean, chicken wing. Hey, what are you supposed to do?
What are you supposed to do?
Kick it.
Gee, we sound like two bitter old Collingwood.
No, we don't. And how's was it Maynard that ran 40 metres out of the back line and they didn't penalise us?
No.
Yet there was a 15-metre kick that they thought was 9.
Yeah. Crazy.
I feel sorry for them. I really do. The men in yellow.
See you, Dominic. See you, Emily.
Bye, boys.
Bye-bye.
Up next, Cars with Paul Gover here on 3AW on a Saturday.